Welcome to the exciting world of options trading. If you're a beginner looking to dip your toes into this dynamic market, you've come to the right place. Options trading offers a unique and flexible way for investors to manage risk and potentially profit from market movements. But before we dive into the strategies, it's important to understand some key fundamentals. In this blog post, we'll break down options trading strategies specifically tailored for beginners. We'll discuss the different types of options available, examine potential risks involved, and provide valuable insights on how to choose the right strategy for your investment goals. So grab your favorite beverage, sit back, and let's explore the fascinating realm of options trading together. The different types of options. Options trading offers a variety of strategies for beginners to explore. Understanding the different types of options is crucial in determining which strategy suits your investment goals and risk tolerance. 1. Call options. A call option gives you the right, but not the obligation, to buy an underlying asset at a specified price within a specific time frame. This type of option is used when you anticipate that the price of the underlying asset will rise. 2. Put options. In contrast, put options give you the right, but not the obligation, to sell an underlying asset at a predetermined price within a specific period. These are typically utilized when you expect the price of the underlying asset to decline. 3. Covered calls. This strategy involves selling call options on stocks or other assets that you already own in your portfolio. It generates income from premiums received while potentially limiting potential gains if the stock's price surpasses the strike price. 4. Protective puts. Protective puts involve purchasing put options as insurance against potential losses on existing investments in case their value declines significantly. 5. Straddles and strangles. Straddles involve simultaneously buying both call and put options with identical expiration dates and strike prices, allowing investors to profit from significant moves in either direction. On the other hand, strangles involve purchasing out-of-the-money call and put options with different strike prices but similar expiration dates. What are the risks of options trading? Options trading can be an exciting and potentially lucrative venture for beginners, but it's crucial to understand the risks involved. While options offer flexibility and potential profit, they also come with their fair share of risk. One of the main risks of options trading is the possibility of losing your entire investment. Unlike buying stocks outright, where you only risk the amount you put in, options have a time limit. If the option expires out of the money, meaning it didn't reach its strike price by expiration date, you lose your initial investment. Another risk to consider is market volatility. Options prices are influenced by various factors such as supply and demand dynamics and overall market conditions. Volatile markets can lead to sudden price swings that may negatively impact your options positions. Lack of knowledge or understanding is another risk factor for beginners. It's important to thoroughly educate yourself about how options work before diving into trading them actively. This includes learning about different strategies, contract specifications, and pricing factors. Additionally, emotions can play a significant role in options trading risks. Fear and greed can cloud judgment and lead to impulsive decision-making. It's essential to remain disciplined when executing trades based on well-thought-out strategies rather than succumbing to emotional reactions. Liquidity issues pose a risk in certain situations. Some less popular or illiquid option contracts may not have sufficient buyers or sellers available at desired prices when you want to enter or exit a position quickly. Understanding these risks associated with options trading is vital for any beginner looking to get involved in this complex financial instrument. By being aware of these potential pitfalls up front, you'll be better equipped to make informed decisions while managing risk effectively. How to choose the right option strategy. When it comes to options trading, choosing the right strategy is crucial for success. With so many different options available, it can be overwhelming for beginners to know where to start. However, by understanding your goals and risk tolerance, you can narrow down your choices and find a strategy that suits your needs. One important factor to consider when selecting an options strategy is your time horizon. Are you looking for short-term gains or are you in it for the long haul? If you have a shorter time frame, strategies such as buying calls or puts may be more appropriate. On the other hand, if you're willing to wait longer for potential profits, strategies like selling covered calls or cash-secured puts might be better suited. Another key consideration is your level of risk tolerance. Options trading inherently involves risk, but some strategies carry more risk than others. If you're a conservative investor who prefers limited downside and lower potential returns, then strategies like buying protective puts or using callers could be suitable options. Furthermore, think about whether you want to generate income from your options trades or focus on capital appreciation. Strategies like selling covered calls and cash-secured puts allow traders to collect premiums upfront in exchange for potentially giving up future upside potential. Take into account any market expectations or specific stocks that interest you. Certain strategies work well in bullish markets while others thrive in bearish conditions. Additionally, individual stocks may require different approaches based on their volatility levels. In conclusion, without using those exact words, finding the right options trading strategy requires careful consideration of factors such as time horizon, risk tolerance, income generation versus capital appreciation goals, and market expectations. By taking these factors into account and doing thorough research on each available option strategy before diving in headfirst will increase the chances of success as a beginner trader. Conclusion: options trading can be a highly lucrative venture for beginners if approached with the right strategies and knowledge. By understanding the different types of options available, assessing the risks involved, and selecting suitable trading strategies, beginners can navigate this complex market effectively. It is crucial to remember that options trading carries inherent risks and should not be taken lightly. Risk management should always be a top priority, with careful consideration given to factors such as time decay, volatility, and potential losses. When it comes to choosing the right options strategy for beginners, there are several approaches worth considering. Covered calls provide a conservative method by generating income from existing stock holdings. Put buying allows investors to profit from downward price movements without actually owning the underlying asset. For those seeking more advanced strategies or higher returns, spreads offer flexibility by combining multiple positions into one trade. Straddles and strangles allow traders to take advantage of significant price fluctuations in either direction. Regardless of which strategy you choose as a beginner in options trading, education remains paramount. Take advantage of online resources such as tutorials, webinars, and demo accounts offered by reputable brokerage firms. Joining communities or forums where experienced traders share their insights can also provide valuable guidance along your journey. Remember that practice makes perfect when it comes to mastering options trading strategies. Start small with low-risk trades until you gain confidence in your abilities and develop consistent profitability over time. In conclusion, without explicitly stating it, while options trading may seem daunting at first glance for beginners due to its complexity and risk factors involved, armed with proper education, and understanding of various option types and associated risks plus employing appropriate strategies, success lies within reach. So dive into this exciting world today.